All right, what's going on, everybody? We're back at you here with another webinar with highlighting a couple of users here from the chat room. And we do this here just to showcase some of the activity here that's happening inside the chat room, and then some of the characters that we get in here. Again, with the chat room, I mean, I don't know how familiar you guys are with chat rooms, if you already belong to one, if you don't already. Some of you guys don't need it, to be quite honest. Some of you guys do not need a chat room. It's a lot of noise for you guys. And hold on, let me move the screen here a little bit. Some chat rooms are a lot of noise for you guys, and I gotta be honest. Sometimes they're a lot of noise for me too. And I disappear for a while. Some of the guys here in the chat room, some of the ladies here in the chat room, they know as well. I'm kind of in and out sometimes when I'm feeling like I'm providing value. And it took us a while. It took us a while to figure out how to run a chat room as well. And how many of you guys are in like Telegram chats? How many of you guys are in like WhatsApp chats and Telegram chats on, let's say, even crypto or options or whatever? Like, go ahead and shoot your answer out in the question box there. Let me know if you guys are in, Telegram chats or things like that. Like, let me know how these things are. I mean, usually most chat rooms you roll up into, they're pretty fucking crazy. They're crazy. There's people talking about all kinds of nonsense that has no bearing or is not going to help you at all. If anything, it creates the wrong perception. It creates the wrong behavior. How many of you guys have been influenced to make a trade based off of the tone or something that has happened inside of let's say a Telegram chat or a chat room, any chat room that you guys are involved in, Slack or whatever it is? How many of you guys have been influenced just because of envy or just because of, oh my God, this guy seems like he knows what he's talking about. I'm going to go ahead and follow this trade. I mean, granted, that's what the fuck you're doing in there, right? I mean, we're in there to, especially if you're a newer trader or whatever, you're in there to try to figure out how to use that information to go ahead and make a trade. But there's a science to it. There is a little bit of a science to it, and it's taken us a good amount of time. It's taken me a good amount of time to make sure that I smack the shit out of enough people so that everybody understands that particular environment. Now, after you do all that, there does come about a lot of users that actually add a significant amount of value, way more than the people who are running the actual chat. And that's kind of why we wanted to do these webinars here. One of those guys happens to be here with us today here. We got Stephen here. Go ahead and intro yourself, man, and let us know basically how you found, the Wall Street Jesus chat room. And then, just kind of give us a background here on some of the stuff you trade here. Stephen, what's going on, man?
Yeah, what's up, Lucci? Thanks for having me on, man. It's I've been hearing your voice for a long time, and same with Jesus. So it's cool to get on and talk to you.
Indeed.
Yeah.
So where's your background, man? What's your background? I mean, is your background always, has it always been a trader, or did you kind of just, stumble onto this thing, or, how'd you get here?
Yeah, I mean, so basically my background's actually in construction.
Okay.
And I have a full-time job now. I kind of do the same thing. I don't know if many people on here listened to Brown Man last week, but me and him have talked. We kind of have a pretty similar job. We're both contractors. We both live in the DC area.
Gotcha.
And so I have a full-time job. I wake up at probably 6 o'clock, knock out a couple hours, do a couple hours during the day after the close, back at it. But I mean, I basically do all that so I can spend time trading,
Wow. I mean, this
Yeah.
is super impressive. I mean, back to back, we have folks here who are, spending time doing what, they need to do in order to put the time and the effort into the market. I mean, I remember when I started out trading, I would literally wake up at like 6:30, right? Hit the gym, make sure I get a fat breakfast, right? Get to the office at like 8 o'clock, which was like an hour drive. And then I would stay there until literally 8 o'clock at night, just reading bid and ask, right? Just trying to figure out supply and demand, supply and demand, supply and demand. Do you feel like you're at a point, Stephen, where let's say you can get a little bit, more relaxed with it, or is this like your routine and this is the way it's going to stay for a while?
I mean, that's a good question. I mean, I guess I'm just sort of adapting to the situation I'm in. You know, my work is sometimes it's actually the last couple of weeks it's been really, really busy, and I've been kind of popping
Right.
in and out, and then sometimes I can just go, basically go ham trading for the whole week, you know.
Right.
So
Right.
it kind of depends what's going on and what the markets are doing. I mean, this summer kind of sucked. I mean, it was
Yeah.
dead about 90% of the time.
Yeah. So I have an interesting question here. So you're saying that sometimes you're able to open up and just, go crazy trading, and other times you really got to focus on your work. So how long did it take you to figure out that you needed a strategy that really accommodated those times? How long did it take you to figure it out? And did you figure it out through taking some losses and realizing that you couldn't employ a couple of different strategies because you had this other kind of commitment? Like, how long did it take you to find that strategy?
Well, let me see. All right, I've been in the room probably about I think I've been in here 3 years now, and
It's a good amount of
at
time.
least two. I can't between 2 and 3, and I actually just took the last master course.
Yep.
But I guess I kind of started trading. I mean, I kind of had some familiarity with the market, I guess, in college. I'm 30 years old, but
Yeah.
kind of had a little bit of familiarity with it. And then I was probably like 23, 24, and I'm not embarrassed to say the Nigerian brothers used to have a book, uh, How We Trade Options, I think it was called. And
Yep.
if you called the toll-free number, you got it for free. So I got that book when I was like 23 and
Nice.
started messing around. And I mean, it was definitely 2 or 3 years. I was just my equity curve looked like a heart rate monitor, I guess you could say. And I actually needed to back up a bit, and I would be remiss. Wall Street Jesus would probably slap me if I didn't at least touch on the fact that I have you know probably a 15-year background in gambling. You know, kind of sports betting. Some other basically sports betting is the main one.
Okay. So you are a probability guy. So you're
Yeah,
in this space. You are
yeah.
that guy.
And so
Interesting.
when I learned about options, it was
I
just
didn't know this, guys. By the way,
yeah.
I didn't know this shit. He's just dropping this shit on me. So this conversation got real interesting. Keep going, man.
Yeah, so I mean, I was kind of trying to, dude. I remember you've talked about shorting GoPro, I think, like a couple times.
Oh my
I
God, bro.
bought GoPro at $80. I bought it at $60. I bought it at $40, and I sold that shit at $9. You know what I mean?
Woo-hoo-hoo-hoo-hoo.
What year was that? That was what, like 2000?
I
That's
think it
where I
was. I
was.
think it was. Yeah, I think it was
Yeah.
2016. Yeah, somewhere around here, guys. I shorted this thing all the way up, and I got smoked out. I think I lost 100 grand total, maybe, just trying to short this thing. And now you're here on the other side. Like, I bought this up here. Where'd you say you bought this? You bought it at 60. You
Dude,
bought it up
just
here.
all the highest points of that chart is where I bought it
Yep.
basically. So that'll give you a perspective of where I was. What is that? 2015. Yeah.
Yep. Yep. Yep.
It was that GoPro, that was when I was kind of trying to start doing stuff on my own. And it
Yep.
was then that I kind of, started really figuring out, technical analysis. I
Okay.
kind of got into Fibonacci's,
Sure.
a couple other strategies there. And uh, I mean, yeah, actually, when I got into fibs, that also clicked with me because it gave me just a defined tight entry point in a name. And I don't even think I was trading options at that point, GoPro
Right.
days.
Right.
And but I started trading equity against fibs, and I could really quickly know when I was wrong. It gave me I'd have a
Ah.
dollar stop, a 50-cent stop, and so that right there jived with my kind of gambling background. It was like, all right, I'm risking 50 cents here to make $3. You know what I mean?
Nice. Okay.
I
So
gotta hit this
after
like,
All right. So after a couple of losses and all that kind of stuff, you started being like, okay, I need to define this risk. I need to find some
yeah,
way to define this risk. And you found the comfort in some of the fib stuff, correct?
yep, yep,
Okay. Okay. So
yep.
then you started, and then when did the options come in? So you're doing this shit on some of the equities and stuff. When did the options come in?
Yeah, so I was kind of, I kind of just stumbled across stuff on the internet, and I actually started out, interestingly enough, selling spreads. And
Okay.
not many, I don't think many people start with that. And it was kind of,
Nobody starts with
yeah,
that shit. How many, and just to ask you guys out here, we got a bunch of people in here. How many of you guys have sold an option before? And how many of you guys have actually, let's say, sold a spread before, whether it was naked or, a call or a put? Just go ahead and drop us in there. Are you guys actively selling stuff, or are you mostly, just long only? Most people who start out trading options, they don't even know about shorting it. I'm sure some of it was your background already in that kind of world, in that probability kind of world.
yeah, yeah, definitely. Because selling spreads, as you know, it is kind of a probability game. You
Yes,
know, it's
yes.
definitely. I mean, I mean, that's basically what quants do is they set up these computer programs to grind out these little edges.
Yep, yep.
And so that's kind of where I started. But really, and it didn't really suit my personality. I think I came to realize later on. And when I got into the room here, I think I came in on one of those free trials, and just after listening to Jesus for 3 days, I was like, all right, sign me up. I'm hooked already.
Yep.
And I started to get a feel for what uh, I started watching all your videos. I read dark pools. I mean, all that stuff, and
Yep.
just kind of
Yep.
got a feel for like aggressive, directional, like what the hell was really going on in the options market.
Sure, sure.
And so then I started to kind of formulate a strategy. But even then, I was taking every bet. I was a degenerate. I mean, as Jesus likes to say, I was putting a needle in my arm every second I could. And so what I kind of started to do, I realized basically at the time I was more structured and advanced in betting on like college, NFL and college football. And so
Right, right.
I kind of applied some of that strategy and discipline. And what I did for about a year was every trade I made, I logged it into just an Excel spreadsheet, and
Okay.
I kind of tagged it with some parameters, basically days to, and this is mostly swings, days to expiration,
Yep.
in the money, out of the money, uh, whether it's a long call, vertical, iron condor, whatever it was. And then
Okay.
I basically broke down where was I making money, where was I losing money, and how
Ah,
big was my edge essentially.
okay. Okay. So you went serious journal on them
Oh
right
yeah,
there. You went
yeah. I did that
crazy.
for a year. I mean, I had thousands of trades in that thing,
Right,
and
right. I
so
did that for I did that for about 2 years. I
yeah.
tracked everything, just like you were saying. I tracked my commissions. I wanted to try to negotiate my commissions down. I tracked literally everything, and then I was like, oh shit, I'm just an emotional junkie sometimes, and I could literally pinpoint the days just by looking at the P&L, bro. I got so good at just looking at it that just by looking at the P&L, I'd be like, yep, this is where I lost it. Yep, here's where my emotions, like I wanted to make,
Yeah.
40,000 this month, or I wanted to make 100,000 this month, and I fucked it all up, towards the end of the month. So how many of you guys journal too, by the way? Are you guys actively journaling? I would say if you're a newer trader, and I'm not going to say you have to journal all the time. However, there definitely is value to reflecting on what you're doing. Remember how many decisions that you guys are making on a daily fucking basis if you guys are day trading. So it is always going to be beneficial for you to aggressively choose, to write down all these things, write down what your thoughts were at those times. How many of you guys use journals right now? Currently in your trading here. So, anyways, back to you, Stephen, after the journaling here.
Yeah, and I don't really do it as much anymore because it kind of served its purpose to a point. It kind of slapped me in the face, like you like to say. And I mean, I would track earnings plays, and I mean, it goes without being said. Anyone out there trading earnings, just quit it right now because you will blow up or you'll quit it eventually. But I mean, I would over the course of like 6 months, I was like 3 and like 15 trading earnings. You know what I mean? It
Yep,
was just
yep,
not. It was losing. It
yep.
was negative expected value if you want to use a
Yeah.
gambling term.
let's
And
let's let's divulge here for a second. Why is it that we need to see the shit on paper, or we need to see the shit in front of us in order to snap out of it? You know what I'm saying? Like, you knew the earnings, like you just said, you went 3 out of 15, but it's like when you saw it on paper, it's like, oh, this is where I fucking suck. But for some reason, you need some kind of an ancillary stimulus, right? It's like you need some kind of a way to look at it and be like, all right, I gotta cut this shit out, instead of just being like, fuck, and you just keep going at it. That's, I think, the dark side of this particular business that we're in. Anyways, continue, brother.
yeah, no, that's a great point. I mean, it's kind of. I mean, Wall Street Jesus. I mean, he kind of jokes and says he's a degenerate, but I mean, he's not your average degenerate. That guy is
He's not.
disciplined
He
as it
really
gets.
is not. He has seen that boy has seen so much shit in his 20, 30 years that he is actually the furthest from the degenerate that I am so much larger of a degenerate, quote unquote. You're absolutely right, bro. You're absolutely right. He only goes with a specific type of market, specific type of flow, and he has very defined he'll never let this shit run like you and I will try to do. He will never do any of that. You are so right about it. I don't know how he does it, bro. I tell him all the
Yeah,
time too. I don't know how he fucking does it.
it's impressive, no doubt. And so that's kind of what I was trying to get to that point. I mean, basically, I wanted to see it, empirical data and just black and white, and say, look. And so what I found out, basically, long story short, was that swinging options, I had I was a long-term loser over a big data set, swinging front month and basically weekly options.
Okay.
And so, but playing in the monies, at the monies, and going out. And if I was out of the money, going out 2 or 3 months, I mean, I was well in the black. I mean, I was making money. That's what I needed to be doing, basically.
Ah, okay. Okay.
And so that's basically, my strategy now. I really don't hold front months overnight, hardly ever. I mean, I'll go really, I mean, every now and then,
Right.
expecting some weird sweeper, some weird news, something like that. But
Right.
basically, I that's how I kind of manage my risk. I use fibs to sort of hone down the entry, the entry points, and
Sure.
yeah.
Okay. Okay, so let's drill down on this strategy here, but we're gonna take a second here. I wanna see how much like the chat room and some of the flow and Jesus and whatever it was, like how much of that was helpful to you or even hurtful to you, getting to where you need to go. So I guess the question is like, what are you using this chat for in your in your travels here?
Yeah, no, that's a good question. And when I first came in, I think when everybody first comes in this room, they're like, they see these things going down the right side over here, and they see Lucci, making 200 grand a day, and it's a little bit overwhelming, to be honest. And
It
once you
is.
kind of hang in there for a while, you kind of realize that, well, first of all, there's a lot of different uses for the chat room. I
Yes.
mean, and it differs depending on the market environment, in my opinion. I mean, during 2017, it was like it was momentum sweepers, and you just hop on and you just buy, you just go with the momentum, and
Yep. Yep.
I mean, anyone could have made money doing it, honestly. I think a
Yep.
lot of people got probably pretty cocky, and maybe they're not hearing him, whatever. There was a lot of people out there like that, but
That is a little sidebar here. That's exactly what happened with a lot of people. I mean, it was so easy to dip by a sweeper in a bullish environment, aka an Amazon going from $1,000 to $2,000. I mean, these people thought they were geniuses, and rightly so. I mean, their accounts are looking fat, everything is looking great, and now when you talk to these same people, you can't even get a fucking response from them. So oftentimes, again, market environments change pretty aggressively, and they support a couple strategies over another. Like 2017, guys, I wasn't making shit. I wasn't making shit. I would make a couple thousand here and there if I was lucky. Because it's not my bag. It's just not my bag. But if you take this market, I'm all over it here. I'm all over it. So continue, Steve.
yeah, I mean, honestly, and Lucci, because I haven't really been in here in a market. I mean, honestly, I've never traded a market like this. I mean,
Yeah, yeah,
so, and I definitely haven't seen you trade a market. I've seen you in 2017. We
yeah.
were all kind of doing the same thing. But now
Yep,
I'm kind of seeing,
yep.
the old Lucci, I guess.
Yeah, yeah, you are. This is when, yeah, this is my time to shine, and everybody has their sort of time, their period in time, and the momentum and the juice and the range is so quick. To your point where you're talking about your fibs and you're saying that gives you comfort on your risk. I know immediately in markets like this if I'm wrong because of the freaking momentum and my P&L. That's just the way that I work. So if I get
Mhm.
if I start to size into a trade, I know immediately just because the crazy momentum that we have, and that momentum is strong enough that I can flip, I can take my loss, flip, make it all back, and then some. And that's how I'm able to just work so well in this particular environment. The other shit where we're just going up and up, and that's just that kind of one direction trade. It just doesn't. It just didn't suit me. So now you're seeing a different me completely.
Yeah, and now really, I think the flow the last, I mean, really a lot of this year, I use it for as much of a sentiment gauge as anything, you know.
Nice,
And
nice.
and
Me
and,
too.
and Wall Street Jesus his sentiment stuff is just spot on, and really his uh his sort of take on the markets has almost kind of become my own, you know, that sentiment is really what is driving supply and demand,
Yep.
and it's and that's kind of how I think about the markets now, which is also really cool. But yeah, as far as I mean, the board I'm looking at it now looks great over there. I kind of missed, we kind of had my internet went out here about 2 o'clock, and I kind of had to scramble around to get back on this WebEx, so I kind of missed the end of the day here. But
No
uh,
doubt.
so yeah, I mean, really now it's a great indicator for squeezes, and it's almost like
Yeah.
I'll play the S&P, I mean the futures, I'll
Yep.
play, you know, especially if I'm in and out, it's like I can come in there, throw on a fib, I got the sentiment squeeze, I can just ride out some ES futures, you know, and kind of make a
Right.
trade.
Nice. Nice. Okay. All right. So let's get into your strategy here. Let's actually get into your strategy. Can you give us an example, basically, of a spread trade that you may throw on that you're using, your sort of fib situation, or any other sort of indicator, whether it's sentiment or just something that maybe you're looking at, something that you have on currently. Let's just take a look at a trade.
Yeah, so I guess, and like I said, my brother actually got married this past week, and so I'm kind of on a half
Gotcha.
vacation down in Florida,
Yep.
and I've kind of been out of the market, you know, glued in the last, like, better part of the last 2 weeks or so. But I mean, I still kind of have a good enough feel. I'll listen to Jesus talk, his posts and stuff, right? I kind of know when I pop in, what I'm looking for, and what I need to do. And
Right.
so on the fib front, so there's also, I use Fibonacci's, but I also use this technique that I call symmetry, and it's kind of hard to explain, but there's actually a really good recent example of this, and I
Okay.
used this to make a trade yesterday,
Cool.
combined with kind of sentiment. Obviously, all the sentiment indicators are saying, you know, buy right now,
Yep.
and so basically, what symmetry is it's, if you start looking, you know, at the charts, and this upswings and downswings that really actually end up forming sort of trend lines often are really similar to each other. And that holds true on 1 minute charts, and it holds true on monthly charts.
Okay.
So I was looking at the drawdown on the December S&P future contract.
Okay.
The January, check this shit out, it's insane. The January high to the February low was
Yeah.
344 points. And
Whoa.
so I'll use a little tool and toss. And so basically I took that 344 point swing down, and I put it to the recent high that I guess we just made here in last month.
Right.
We bounced yesterday at the exact tick of that 344 points from the peak in
Right.
September.
Right.
And so I basically, and it's a little different than SPX and SPY, but excuse me, but
Sure.
this was specifically the December S&P future contract,
Right.
and I was watching that level, and it hit it to the tick, and I actually kind of front run that trade because I popped in yesterday, and I think it hit it yesterday, yeah, and
Yeah.
what I did is I sold some December put spreads in SPY.
Ah,
I didn't want to
okay.
hold the futures overnight. Like I said, I'm kind of halfway in the market right now, so
Right. Right. Right.
I took advantage of the volatility basically and sold some SPY December, like 250, I think, by 240s. And I mean, I don't have that much money out there right now, so I went, you know, decent size on it. And
Yep.
basically I was like, all right, if it gets below that, I think it bounced at 2603 on the ES.
Yep.
And if it got below that, I was just gonna, you know, blow it out. And
You
it's
said the
obvious.
two. You said the 240 put. You said the 240 put.
I bought hold on, let me look. I bought I bought the 240. I sold the
You sold the 250.
yeah.
Uh-huh.
And this is
Okay.
when it was at the ES was at I guess 26 I mean, I sold it into that. Basically put a limit order out, and it got hit there when ES spiked down, I guess yesterday afternoon,
Right.
and got filled on that spread. And I mean, so those symmetry and the fibs and all that, it's not a magic bullet, I mean, it's
Right, right,
basically
of course.
it may hit there, it may blow through it, it may bounce 2 points and then dump, but for that's my line in the sand, that's my bet basically.
Got you,
And
got you.
so that was a recent trade that kind of threw in everything. That's a good example of basically my strategy, the sentiment. I mean, kind of lining everything up and making a trade.
Right, right. So, but it took you a while to realize, like, you had to find a way to fit in all these components. I mean,
Yeah.
you first found the fibs, then you found the options, then you found the writing stuff, then you found Jesus and the sentiment kind of stuff, and now you're in a place, correct, where you're kind of putting it all together here, and you're a lot more comfortable with that particular strategy. Yes.
Yeah, absolutely. And I've traded a lot of different strategies. There'll be some little, periods in the market where sweepers are hitting like these kind of illiquid uh illiquid names that you really can't, it's tough to day trade the options on or just get
Yeah.
a, and
Yeah, you
so
can't fuck with.
I kind of messed around with Wall Street Jesus' strategy, just ripping some equity, real
Yep.
quick. And so, I just kind of have built this little arsenal of stuff to kind of be able to adapt to the whatever market environment we're in.
I see. I see.
Yeah.
Okay. Okay. By the way, after hours, if you take a look at the Facebook, that thing is back up, and Amazon is up a whopping 20 points, I believe. Anyway, so you'll go out in time. So my next question is how much do you like, position size and all that kind of stuff? Are you,
Yeah,
are
actually,
you are you in with a 10 lot, or are you growing to a larger, size? What are we talking about here?
so I mean, that's a pretty good question and one that I'm still sort of,
Trying to
so
figure out.
I actually in my little spreadsheets, I was doing, I basically, there's formulas that you can basically position size based on your edge, based on your average loss for sure, your, what you can make when you win, what you can make when you lose, and
Right.
and the percent of times that you'll hit it. There's a formula that you can, that's like the most optimal bet size essentially. And
Ah,
yeah,
okay, okay.
yeah.
We didn't
And
actually
it was
talk
invented
about
by a
this.
dude who was a famous blackjack player named Edward
Ah,
Edward Thorp, actually. And so card counters actually use that formula to size their bets based on the odds that they know they have, right?
okay. So
So
the
I mean,
last
it gets
component.
pretty detailed. I don't
Yeah.
want to like, get all
But
in
you
it.
know what? The last component that we didn't bring into your strategy is the background on on that gaming side about it. So let's bring it in here. Let's bring it in here. So how much of the gaming aspect of, I mean, obviously the big games out there, the blackjack, the football betting, and all that kind of stuff. How much is that influenced, or how much has that shaped, your current strategy right now? I mean, it seems to have quite a big impact.
Yeah, I
Somebody's
mean,
asking you here too, by the way, is it Kelly bet sizing? They're
that's
asking
it.
you if
That's what it is.
that's it. Okay,
Yeah.
so Alex here has asked, is he talking about Kelly criterion and the Kelly bet sizing? So that answer is yes.
Yeah,
So
and
any of you professional gamers out there, that's what you're looking for.
it's a little bit, it's a little hard to adapt that to the markets because they're so dynamic. Whereas like
Right.
blackjack, a card counter, and a card counter or a poker player, they basically can have a really detailed analysis of what their odds are and how much they stand to make or lose. Where in the
Right.
markets, especially with options, it's not quite as cut and dry. And
Right.
so, you don't want to just be uh, I kind of use it as a rule of thumb, I guess I'll say, you know.
Okay. Okay.
And honestly, though, I think from a mental perspective, I kind of just find a little bit of peace in that. And I don't, I mean, when I do try to kind of, and I actually am pretty conservative. I actually will bet less than what those formulas say to bet. But
Got you.
when I
Got you.
try to size up, honestly, most of my good trades come from just playing smaller size. So that's one thing
Playing
I
smaller.
definitely want to work on and get better at,
Yep.
uh, for
Yep.
sure.
Okay, so let's go ahead and start taking some questions here for Stephen and his particular strategy. But before we get to that, Stephen, what's your, I asked this to Brown Man last week. What's your goal here, man? What's your, why are you doing this here? Why are you doing this? I mean, is it for eventually to get out of the job that you currently have? Is it to finance some other projects? What are you doing out here, man?
Yeah, I mean, of course, I guess the ultimate goal of everybody is to kind of do something that they love doing, and I've done some. I mean, when I got out of college, I was doing construction, and I've been doing some other things. And I mean, this is so far, this is by far the most enjoyable thing that I've done. So I just want to do this to do it. You know what I mean?
Got you.
Whatever
Got you.
comes with it, whatever happens after that, and who knows, man? I might get tired of it, or I might just blow everything out, you know, and move on to
Yep.
something else. But I kind of right
Yep.
now and for the foreseeable future, this is just the game I want to play. You know what I mean?
Got you. Got you. Do you ever get, overwhelmed, I guess, with the fact that you got the full-time job, right? And does it ever seem like
So, all
it's
right,
it's
I,
it's
actually, there's
complicated
something
to
else.
juggle
Yeah,
both?
there's something else I wanted to mention. And this is a good segue into it. I took the master course this past session you did, and
Sure.
I kind of like to. I guess I'm overconfident a little bit, and kind of was thinking I don't really need to take it. I kind of know what I'm doing, blah blah blah.
Right. Right. Right.
And also I kind of discounted the mental aspects of what we're doing here, and I remember I was kind of practicing my tape reading, and it was like the second or third day in the course. And I
Yep.
asked you a question on the nightly course. I was like, Lucci, you got any tips for, today I think I was watching the Facebook tape like all day, and it didn't do shit.
Right.
And like Tesla's popping off and Apple's going, and I was like, you got
Right.
any tips for, you
Right.
know, for not getting too locked into a tape? And,
Right.
and you kind of started to like, you're like, all right, you're probably not gonna. I've gone back and listened to this a couple times. I thought it was just spot on, and it helped me. I'll explain how it helped me. And you basically said, you were like, fuck everything else. You know what I mean? You're locked onto that tape, and you're paying with your time for that information.
Yes.
And if you spend enough time on that tape, you can own it. You can make as much money as you want to, and who cares about anything else basically.
100%.
And sort of, you also talked about how you're at a point now where, and I think you said it last week on the webinar, where you don't care if you miss a trade. And like, I like to think I didn't have FOMO, that like, because I don't chase highs, I buy pullbacks.
Right.
But there's other types of FOMO besides chasing highs. And
100%. What are those types, bro? What are
so,
those
dude, so
types?
I'd be at work, and I'd be like stressing out because I'd see the market up, and I'd just be like, God damn it, I want to be out there trading. You know what I mean? I kind of used to have that mentality of, where I had a trade set up and it didn't work out, but this other one, the second best trade setup worked out. And like, really, when you said that to me, I kind of started thinking about all these other things that really are FOMO if you think about it, but they're just
100%.
not what I had thought of FOMO as. And I've gotten better since then at sort of just, being okay with not being in a trade at all times.
Right. And I think that was a discipline that you needed to learn simply because you're not able to, this is not your full-time job. This is not your thing. Every single day from 9:30 to 4 o'clock, you're sometimes unable to take advantage of it. So that was a skill and a discipline you needed to learn,
Yeah.
because if you didn't learn that, this shit would be fucking pretty difficult
And it was
for
gonna, and it
you.
was, and honestly, it was probably, I didn't even probably realize it, but that was affecting, I mean, my other work, probably my personal life, all these things. And
100%.
now I'm more at peace with just kind of just,
100%.
you know, being in the
100%.
moment, whatever you're doing.
That's it. That's a huge thing. And guys, I mean, again, like I don't remember the specific time, obviously, that I said this, but I'll say a lot of things. I talk a lot of shit, you guys know. But there's things that you learn about the mind, over many years of doing this, how it works, how it doesn't work, where it sucks, where it tries to pull you in other directions. And one of those things is really just about the losses. It's like people look at losses. How many of you guys look at losses like you look at it on your P&L and you say to yourself, oh, fuck, man, it just feels horrible here, seeing this shit in red or whatever. Most of you guys, that's how you're looking at your P&L. When I look at my P&L, and again, this is assuming I'm at a good place mentally. When I'm looking at my P&L, I'm like, all right, I paid for this information. I paid for information right here. And whatever information that I gathered from that is going to help me rip a huge trade off this thing, or it's going to help me flip, or it's going to help me make the right next decision. Whatever that next decision is going to be, whether to burn out and take the loss, or whether to, hang on, add some, whatever the case is, as long as I'm at a good mental state, I can make those decisions. So I don't look at the losses as just a shitty red number here, and and it kind of puts you in that bad place. Now, I'm not going to say I've always done it, because yes, taking a loss fucking sucks. It's always going to suck. And again, it just depends on how you look at it. And the more you're able to embrace them, the more you're able to turn them into, hey, you know what? I'm paying for information. I'm paying for it with, as Steven said, with time and with money. And eventually here, that thing's going to come around, and I'm going to friggin' destroy this thing, as long as I'm on, an even, and as long as I'm in a good mental state here. So, Steven, I would say that lesson alone here, it kind of gave you the life, man. It kind of gave you the strategy. It gave you the right mindset to actually pull off the strategy that you were going for here.
Yeah, no doubt. And just to, with as far as losses go, I kind of look at it as a just a bet. I'm reading. I actually just started reading this book called Thinking in Bets. It's about a poker player wrote it, and it's just it's you make a bet, you win, you lose. As long as you're playing with the edge on your side, it's just whatever happens, and that's just, that's what the markets are, and that's how I look at it. That's what makes
100%.
me be able to sleep at night, basically.
100%. And guys, you got to be able to get there. I mean, it seems like something that it might seem for some of you guys that it's a difficult place to even get to, and you don't know how to get there. But that's really where you're trying to go, because like, I don't use fibs, I don't use fib. I've never even used a fib, and I've made fun of it my entire fucking life. My entire trading existence, I've made fun of that shit. But this man here is using it in conjunction with so many other sciences, so many other disciplines, and now he's got a strategy here. So it's not about the strategy; it's what works for you and how you deal with the mental part of the game. There's a lot of things that I've watched him do in this chat, by the way, that have made me a fuck ton of money. I think Tarod here is talking about that bank trade. There's a lot of times where some of the guys that I'll teach, they'll do a lot of the work for me. It kind of sounds crazy. It sounds crazy, and it sounds kind of selfish or whatever, but damn it, that's what we're here doing. If I don't have the time to watch a certain tape, these guys are out here watching these tapes, and they're like, dude, I'm in here. And we're all very comfortable talking about our losses. We're all very comfortable talking about our entries and everything. And that's what gives me the confidence in these guys' ability, the ones that we've brought on here to talk to you guys. All right, so let's take some questions here from you guys. Anything you want to go ahead and ask Stephen about his particular background. We got a question here from Tiffany. Curious to know if he started off with enough cash to avoid the PDT rule. If not, how did he navigate PDT with his current strategy? So what you got on that one, Stephen?
No, I didn't. I started off with, and I would kind of put a couple G's in an account, and I blew up like 3 or 4, just probably $3,000, $4,000, $5,000 accounts, and I finally just said, you know what, like I kind of just saved up some money, I think I put in like 15 grand, enough money where I was like, if I lose this, I'm fucked. Like
you're done. Okay.
At the time I'm 24 or whatever, like it was a lot of money. And so I basically, I grew it to the PDT threshold, 25 grand. Kind of started trading more intraday as well, which honestly, the PDT rule is so stupid, man. It's you can manage day trading, you can manage risk arguably a hell of a lot better than you can holding stuff overnight. So
I would agree. Yeah, I would agree with that statement. So Tiffany, I would respond as well to tell you to move to a cash account. That way, if you are trading options or, even if you're trading equities or whatever, you're unable to trade with cash that hasn't cleared. That way you don't get yourself in a situation where you violate the PDT rule, and so on and so forth. The shitty part about this PDT stuff, and again, like I see a lot of people come into the rooms too and have a situation with it. And what ends up happening is, you end up holding a position simply because you don't have any bullets left. And if the tape is, it's just a shitty place to put yourself in. If the tape is telling you get the fuck out, but you don't want to get out because you don't have any bullets left and you can't make another trade, into tomorrow, what Steven said is true. There are all different types of FOMO. And that's another fucking type of FOMO right there. You have the fear of missing out on the fact that you can't make a trade tomorrow. But in reality, it's the trade that you're in now that matters. And who gives a shit about tomorrow? Who cares about tomorrow? But again, this is a difficult thing for a lot of people to get through, and that is another form of FOMO here that you're going to have to deal with. As Steven said, there's a lot of different forms, and that's actually a fucking big one for a lot of the smaller accounts out there. So I would totally switch to the cash accounts, and that way when you trade the options on a cash account, it only takes a day for these things to clear, and then you're going to have that cash available tomorrow. Now, of course, you can't go, you can't buy more than the cash that you have, but it's whatever. The devil's in the details, so to speak, and you'll be all right. You'll be all right there. What else we got? I think Brown Man here has a couple of questions here for you. Okay, there's a couple questions about risk and a couple of questions about margin for writing options. What do you got on that one? Like, do you need a big account to be able to write options?
I mean, it depends. No, I mean, I don't think so. I mean, like you say, Lucci, I think if you have, I mean, I started doing it when I had really small accounts. Like I had at that time, I just had poor risk management, and you can't have poor risk management when you're writing options. And
Indeed.
obviously I've come some way since then, but you can start writing options when you have you have to have a margin account, obviously, but you can have a margin account for $5,000 and start writing options. And that's actually something I want to, I think Silverfin or one of the dudes in the room was talking about setting up, maybe it was Maz, setting up another account. And I want to set up another account for specifically writing and just try to build it up slowly, because we had that debate in there the other day, Lucci, about writing. And
Yeah.
when Lucci's writing and he's bringing in 10, 20 G's a day, you're not going to be able to do that with a small account, obviously, but it's a consistent way to make money. And I would definitely encourage people to look into it and just start doing it small and getting a feel for it.
Yeah, so there's a misperception here. So Stephen, let's spend a couple of minutes on this one. There's a big misperception on writing options and the need for a large account size. Granted, you guys, the shit that I do on my personal account is fucking crazy. I mean, so for example, this spread right here is a 40-point spread on Amazon, right? And if we did the math, I mean, all you got to do here, right, is take the 40 points and multiply it by the times the amount of contracts you have here. So let's do this on a quick notepad here, and we'll get a quick number here for you, right? So we got 40 points, right? 40 points on Amazon, and that's times 60 contracts, right? And you have to multiply by 100 here, because that's the exposure here on the amount of shares that you have, right? So let's just go 4,000 here. 4,000 here times the 60, right? So what do we got? That's it's a fuck ton of money, probably. What is this, right? So it's $250,000, all right? So in order for me to write this spread right here, it's $250,000, and my max profit is about what, $2 on this? So $2, we'll call it whatever the hell. We'll just say $2, right? 200 per spread, all right, times the 60. So I use $240,000 of leverage to make 12 grand. Okay. Now this is the extreme point, right? I mean, who would do this with a decent sized account, right? It's like, why would you risk 240 grand to make $12,000? And I'm actually going to have Steven answer this because of his gaming background and everything. Why would anybody do this, Steven? Tell the people.
Lucci, you know what it's exactly like? It's exactly like betting on Floyd Mayweather to win a fight.
Thank you.
You bet 240 grand on Floyd Mayweather. You let the bank hold your money, and you get back minus 3,000 or whatever it is for Floyd Mayweather to win the bet. You know what I mean?
Exactly.
You have a high probability of profit, and even though you're risking 240,000, you're not actually gonna cut it short well before that, obviously.
Exactly. So my actual risk on this with the strategies that I'll go for, sometimes I'll hold 100% of the credit. So it'll be like, maybe it'll end up being like 20 grand max that I'll actually risk and take a loss on it. Okay. And that's it. So what Steven is trying to say, and what I'm trying to say, is that you can scale this down very aggressively and write 5 spreads. You can tighten up the spread a little bit too. You know, you don't have to also go after the Amazons of the world or the crazy names or whatever it is. And you can scrape together, some really, really fat premium. And even if you're going for dimes and nickels, this is also another strategy that I do on the side. I don't go as aggressive as I do here. I scrape, dimes and nickels. I'll start writing a spread down here instead of way up here when these options are worth $4, $5, $6. I'll start writing options at 40 cents or 20 cents because to me, it's free fucking money. It's free money. And you can even do it with, as Stephen said, with a small account. So again, the misperception here on writing options is that you need a monstrous account here to be able to do it. Granted, some of the large funds out here, this is all they do. I mean, if you got unlimited leverage out there, this is all you need to do. You don't need to figure out where Amazon is going to go tomorrow. Like, fuck that. Let's just sell way out of the money and let's just scrape these dimes and nickels. And that's a great strategy there too. And you can deploy a lot of capital and you can make a great return. So again, there's FOMO in all types of ways, right? I mean, there's FOMO of buying the highs on a fucking GoPro, or there's FOMO on I wish I had a larger account and I can't write any fucking spreads, guys. So again, it is a misperception. It all depends on what you're trying to get out of it and how patient you are. Yes, you're not going to friggin' take $5,000 and make 20 overnight. Yes, we know that. All right. But what's the likelihood of you doing that shit anyway, man? Most of the times you go for that trade, you're going to blow out your account. This is a much more consistent strategy when combined with the right mentality and the right science. The sentiment reads from Wall Street Jesus here. Stephen, any other comments you would make here?
Well, yeah, I mean, just to that point, some people I think also probably discount. I mean, some people might just be configured mentally to do better when you're selling. You typically have a lot higher win rate, but your wins are small, obviously. And so sometimes mentally that's a good thing for people. Like you go to bed every night, you're like, all right, you know what? I made $150. I made $300. I made $500. Yep. And it's win, 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 win. You got a loser every now and then, but it's not, you never know until you try it if that's what makes you feel good, and that's important when you're trading.
Absolutely. So Stephen, would it be that bold of us to say that if you had a $5,000 account, if you had a $10,000 account with some margin and you have some patience and you're not trying to crush it, you're not trying to, double and triple your money overnight, that this is a viable strategy here that is, combined with a lot of the casinos of the world, right? I mean, we're technically the casino, we're selling the bets out here and it's a viable strategy.
It's 100% a viable strategy. It depends what your goals are. If your goal is to, make a living off a $5,000 account selling options, you better be living in Indonesia because you're not going to, you know what I mean? And it's also hard because you see these people out here just scoring on these big, going long options and scoring. But I'm telling you, I've looked at the numbers. You have a lot of losers too, and it takes a toll on you. And you remember the big winners, but you don't remember the 5 losers that got you there. You know what I mean?
Yep.
And so why not try? I mean, I'm a proponent of trying everything, figuring out what you like. And, you have resources here in the room to kind of guide you, whatever strategy you want to go. And yeah, of course, try it.
All right. Great. Let's take a couple more questions here. We got one from High Heat, and then we got one in the room here. What is your let's take this one in the room here. K Trader's asking, what was your turning point? What was the point at which you were just like, all right, this is my strategy. This is when did you get the confidence to be like, all right, this is what I'm doing. This is what I'm going to focus on. Like, when did that happen? What was that moment for you?
I think without a doubt, it was when after logging my trades for such a long amount of time, could just see in black and white, what was making me money and what was losing me money. If you most people, I say most people because this is what I did. I just assume most people, but you kind of go up and down. You make money, you lose. At first you're just losing everything, and then you kind of make money. And then you lose money and you make money, and it's frustrating. And that's usually when most people get knocked out of the game because it's just other things take over. But if you if you really don't know what you're good at and what you're bad at, you're playing the slot machines. You know what I mean? You actually are a gambler and not a, well, I don't think gambler's a bad term, but you're a degenerate if you're just doing that and you're not really trying to improve. And so when I actually saw in black and white, this is the type of strategy that I'm good at. This is what I need to stop doing. And you stop doing it. That's when I made the turn, I guess.
Okay. Last question here. We're going to take, this is a good one here to summarize the whole webinar here, actually. Can you explain some of the psychological similarities you experience? So, you know, behavioral or, you know, the FOMO thing, whatever the hell it is. Psychological similarities you experience while gambling and trading. So, and I guess we could refer gambling to, you know, sports betting and to blackjack. How do both of these professions weigh, like, you know, how do they both of these professions weigh on your mental state? Are they the same? Are they different? Are they,
I mean, when you first start out in the markets, and especially when you first start out gambling, and I have a lot of, I mean, everyone I knew growing up gambled, you know what I mean? And
Right.
and I still have friends that are basically just degenerate gamblers. They lose all, you know, they lose in the long term. And there is definitely a powerful emotional response that you get when you gamble. And I guess, I mean, I'm honestly, I'm more advanced in my sports betting than I probably am even trading still. But I kind of have been able to overcome that by just looking at the probabilities and just I don't even watch games I bet on anymore. You know what I mean?
Right.
I bet on the
Right.
FCS
Right.
game. It's not even on TV, which is, I mean, most people think that's crazy, but there's an edge there, and I don't care what the outcome is. I mean, I know there's an edge. I know there's a mathematical, you know, edge in my favor. So the emotion starts to diminish after a while. Once you kind of, and that, at least for me, I kind of find, you know, stability in just the probabilities, I guess.
Okay. All right, guys. Well, listen, we're gonna go ahead and throw this webinar here, obviously on YouTube, so you guys can catch the replay. We have, of course, the master course coming up in November. We're giving a fat discount on some of this stuff too. We got a couple of spots left. I think we got about 5 spots left. If I'm not mistaken, I can go ahead and confirm that, but go ahead and drop that link there, sanglucci.com/MC, and go ahead and ask us about the discount there. Let's see, we can take one more question here. Question for Lucci: could wise guy sentiment be used to trade large and small accounts the same? I'm gonna let Steven ask that. I'm gonna let Steven answer that, man. Steven, what do you think, man? Can you use the wise guy sentiment to trade a fat ass account or a $5,000 account? What do you think?
Yeah, I mean, I don't see why you couldn't just take a zero off and you call it good. I mean, yeah,
It's
I
all
think so.
relative, man.
Yeah,
It's all
It is.
relative.
It's a
It's all
percent.
relative.
It's a percent. You know what I mean? Like, just think of it as a percent instead of a dollar value, and it's all the same thing that way. You know?
Yep, it's all relative. So Tiffany, me personally, I mean, you know, my account size, I think I'm at like a mil and change. I mean, the flow for me, it's I can't rock without it. I really can't rock without it. I can't rock without just seeing it from a sentiment perspective. So how I deploy my cash, it might have nothing to do with what's going on here. And just like Steven just said, like if he bets on a game, he doesn't fucking even watch the game. You know, I don't need to look at this and be like, okay, I'm going to trade SM or I'm going to trade all this kind of stuff. What I need to look at is look at how the flow changed as soon as the market changed. You know, so SPY all of a sudden had it was kind of gunning towards the low, and then all of a sudden, 2 o'clock, somewhere around there, we started to just go crazy here. So if you notice, all the flow here at around 2 and change, it went pretty fucking bullish here. It went pretty freaking bullish. So just little sentiment ticks like that, it's enough for me to be like, oh shit, I'm stuck short. We got all these people buying here. This market looks fucking, you know, super aggressive here. I'm getting hosed here. I need to hedge. You know what I mean? So Tiffany, it might be something simple as that. And then all of a sudden, boom, I can put the hedge on and I can stop myself from losing freaking, you know, whatever it is. I can make that money back. I can stay in the game until I find the big trade. And as far as the big accounts and the big trades, oh my God, man, come on. Come on. I mean, we had Amazon sweepers at what? 1,300, 1,300, 13, 1,400. And they caught the whole fucking move, man. I mean, there's big boys out here that play serious, serious money. All right? Not anything that I have control of. Not even anything that I can come close to. There's guys putting out $5 million on a fucking option, on a damn option in the indexes for a swing or whatever. Microsoft, I remember seeing from $100, they caught a huge 20-point move in that thing, and they put in size. So not only do they have stock, they got options too. I can't, even if I had 5 million, even if I had 10 million, I'd still be watching this shit. So that's how valuable the sentiment is to us traders in here and to all different kinds of strategies too.
And
All right,
I'll just add one quick point to that.
Sure, bro.
I mean, I have a separate account that's just only equity, and it's sort of I guess kind of long term like over a year, I guess. But I use it. I use the option flow all day for that. I mean, so if you want to have a bigger account, you're not trading options, whatever it is, you're in building a portfolio or long term holdings. And yeah, I mean, there's these guys that come in here and buy these deep in the money leaps. And it's like, I'll just follow that with equity. And there's a lot of different ways for sure that you can use it.
100%, 100%. All right, guys. So hopefully we'll see you in there for the course, stlucci.com/MC. Again, we're giving away a fat discount. I think it's about $1,000. So the original cost, I think, is about $3,000. You'll get the course for $2,000 to $2,500. Go ahead and email us for the discount as well. Hopefully we'll see you guys in there. We start in November, and I think we have another webinar coming up here with another member highlight. So stick around for that. Check out all the shit on YouTube. Steven, man, thank you very much for coming out with us, man. Spending time.
Yeah, Lucci, it's been awesome. I appreciate you having me on here, man.
No doubt. All right, we'll see you all later.